Tuesday, May 17th, 2022, Monaco 64, home of alternative economics and contrarian views. Today, we're going to look at why Elon Musk is 100% correct about inflation, while the central bankers are completely wrong about inflation. I want to look at also the supply chain problem we've had. And as it pertains to inflation, a lot of the central bankers are using the excuse of the supply chain. I'm going to try to prove to you that it's actually a consequence or a symptom of inflation. And then, of course, we're going to look at the markets, where they are this morning. Before I start, though, I'd like to talk a little bit about Billy. A lot of the new viewers ask, who is the dog? What's his name? I like your dog, or I love your dog. And I've spoken about this before, but a little bit of an update. Prior to Billy, we had another Shih Tzu. Billy is a Shih Tzu, and he was called Billy as well. And unfortunately, he passed away back in 2008, early 2008. He was just under 14. I think he was 13 and a half. And then later on that year, we decided to get another puppy, another Shih Tzu. And the reason why we like the Shih Tzus is because I grew up with a Shih Tzu. I was a bit older than a little boy. I was like a teenager, but we had a Shih Tzu, so I got used to these dogs. They're really nice. So we called a breeder near where we lived. He lived on a farm. He was a registered kennel club dealer or breeder. And this was around September 2008, right when everything was imploding. We had a huge credit crunch. And I spoke to the breeder on the phone, and he said, well, we've got one little puppy left. Do you want to know his name? And I said, yeah. And he said, Billy No Mates, because he's all on his own now. Of course, he had his mom and grandma was there and other dogs, but all the other puppies had been sold. But he couldn't sell this one. He needed the money. He actually lowered the price for Billy. So he was a bargain, even though I would have paid what he actually wanted if he hadn't lowered the price. And that's why he's called Billy. I kept the name, and it was a coincidence that it's the same name as the previous dog. So sometimes we also call Billy the credit crunch puppy. So that's his story, and he's going to be 14 in July, and he's healthy except for his vision. He's lost his vision in the last few months. He's always had problems with his eyes. We have treated it. We do everything to keep his eyes as clear as possible, but he's got something called dry eye. And yeah, that's Billy's story. So now back to Elon Musk. I saw a tweet yesterday by Walter Bloomberg, and I think he's got quite a lot of followers. Walter Bloomberg. Yeah, he has 500,000 followers, this guy. He posts a lot of headlines, market and economics, finance headlines. And yeah, the tweet was, Musk says inflation has resulted from government printing money. So I agree 100% with him. What about people who say, well, central banks are not part of government, they're independent? That's another fallacy as well. Here in the UK, Gordon Brown gave the Bank of England independence in 1997. I think that was the year. But just the fact that he gave them independence means he can take it away. So if the Bank of England governors and the MPC raised rates too much, I'm sure they would have lost their jobs. And the same thing goes for the Federal Reserve. I mean, if Powell had been too hawkish in the last 6 months. If he started raising rates a lot earlier and a lot more pronounced in a more pronounced way, he wouldn't have been confirmed either last week, right? They withheld his confirmation for months. So there is no independence. There wouldn't be central banks without government because they're a monopoly, right? They're just like OPEC. And now I want to talk a little bit about a book that I bought about 15 years ago, maybe a little more. And it's called The Raven of Zurich. You've probably heard me talking about this. It's about a banker from the early 1900s in Austria. He's Austrian. He moved to Switzerland. He advised empires. He advised even the U.S. Treasury during World War II and after World War II. During Bretton Woods, I would say as well. And the story about this book, I bought it, I think from maybe Laissez-Faire Books or the Mises website back in 2004 or 5. Don't remember exactly the years. And it was only about like $20 or $30 for the book, The Raven of Zurich. And a few years ago, I found out that this book had become really desirable. And unfortunately, I sold it for $600. I wish I hadn't. Yes, it was a good trade, but you can still get it though online. I'm going to put a link to it below in the description, The Raven of Zurich. And you can check this out on page 98. This is what Felix Sommery said. The state alone is responsible for inflation. Inflation without government, or indeed against government, is impossible. So that's all you need to know about inflation. It's not caused by the supply chain issues. It's not caused by rising prices. Rising prices are the consequence of inflation. And one way to look at it, if you eliminate money from exchange and you go to barter, unless you have something of value to exchange with someone else that has something that you desire, you can't exchange. You can't, unless you lie about the value of the thing you have and you trick the individual. And that's the same thing with money. Money has to have value, and it's usually the most marketable commodity. And the market decides that. And for the last few thousand years, the market has decided on different things. But generally, it's always gold and silver. But what government has done is they've decided that the currency that banks have issued to notify people that they have that gold and silver with them, they've decided to make that a substitute for the real thing. And they started to create them with no backing. And that's what Felix Sommery means. And that's what Elon Musk just said, and he's 100% right. I don't know much about Elon Musk. I mean, I'm always open-minded. I felt a little bit uncomfortable that he took bailout money to save Tesla after the '08 crisis. But I guess looking at me, I was still in the city. I probably wouldn't have had a job for another 4 years after 2008. They didn't bail out the firm I worked for, but they bailed out the whole system. So I guess I could argue that as well. So I'll give him the benefit of the doubt on that. But he's completely right about inflation. And the central bankers, are they lying about inflation? Actually, I'm going to be nice to them and say that they're actually ignorant of what inflation really is. And you might think, how can that be? They've got PhDs, they've gone to Harvard, Oxford, London School of Economics. Well, that's the whole problem, that they've gone to those schools. I know Elon Musk has gone to Wharton, but I think he's more of a like outside the box thinker. He wouldn't be where he is if he wasn't. He would probably be working for the Central Bank of South Africa or Central Bank of Canada if he was like narrow-minded. So yes, he's right about inflation and the central bankers are wrong. And why do I say that? Well, yesterday we had governors of the Bank of England testifying in the Houses of Parliament. And I'm going to put a link to the testimony. It's over an hour, but all you need to do is listen for the first 15 minutes. And you see that Andrew Bailey, the governor, and others that are part of the Bank of England Monetary Policy Committee, they all blamed the labor market. They blamed COVID. They never mentioned for inflation. They never mentioned their 400 billion of QE they created out of thin air during the pandemic. They never mentioned the hundreds of billion of pounds that Bailey's predecessors created out of thin air after the '08 crisis. They never blamed the fact that the Bank of England base rate has been below 1 for, well, almost 15 years. None of that. They blame you, the worker, for asking for higher wages. The only reason, of course, you're asking for higher wages is because they've been inflating the money supply and the credit, and that dilutes the value of the currency. And I think Elon Musk knows that. So if you look at the guys who were in Parliament yesterday, for example, Dave Ramsden, Deputy Governor Markets and Banking, where did he go to school? Well, he graduated from philosophy and economics from Oxford, and he received an MSc in economics from the London School of Economics. So what do you expect? Who else? Ben Broadbent, right? He was there too, Deputy Governor, Monetary Policy. Where did he go to school? Cambridge University, PhD in economics from Harvard. You don't see any of these guys having attended the Mises Institute, do you? Another one here, and this one is an outside member of the MPC. That means he works in the private sector. Guess where he works? Citigroup, right? He works for the bankers. Michael Saunders. Where did he go to school? He studied econometrics at the London School of Economics. Andrew Bailey, the boss, where did he go to school? I think it was Cambridge as well. So they are in another paradigm. And I actually think they believe what they talk about, and they're clueless really to what inflation really is. I actually believe that. You might not. And why do I say that? Well, because I remember before I started looking into sound money, the Austrian school of free markets, and this was late 1990s, early 2000s. I used to think like this. I used to think that CPI was inflation. I used to think that oil prices caused inflation in the 70s because that's what I was taught and people were talking about. So that's why I don't think they're lying, even though it feels like they're lying, only because we know the truth behind inflation. And there was another central banker yesterday, and this guy has no really, he's got a bigger front than Sainsbury's. That's the saying here in the UK. It's a big supermarket. And that's Ben Shlomo Bernanke, the guy who said in 2002 with his helicopter speech, we're prepared to print as much money as possible in order to stop deflation. A lot of people still buy into deflation. And now he's coming out with a book about stagflation. What does he know about stagflation? And I'll end here by saying, don't buy Bernanke's book. Buy the Raven of Zurich. You don't have to buy it actually, because it's there's a free PDF online, which again I'm going to leave a link of in the description. You might find it. It might be over $1,000 now. I don't know. Or I sold it for 600. I actually wish I'd kept it, but there you go. Elon Musk is right about inflation. Now, I forgot the supply chain. Have to cover that. A lot of these guys are saying that it's supply chain problems that are causing inflation. I'll try to be very quick here. It's just a macro view of this. So for the last 40 years, the cost of capital is going down because yields have been going down. And in the last 20 years, central banks have manipulated that as well with QE. And what that's done, that's favored the very wealthy, not just the very wealthy individuals, but it's favored the big corporations because they've got access to cheap credit. And what that's done, it's destroyed the mom and pop businesses, the small and medium-sized businesses, and it's centralized everything. And that's why in the United States now, you don't have too many meat processing companies. You only have 2 or 3. Baby formula, the same thing. My wife was talking to me about that. Apparently, there's only a few baby formula producers. So, and that was created by the fiat currency inflation that we've had. And if you understand inflation, you understand that it's destroyed the economy. And that's why, not just in the US, but everywhere in the Western world, there's only a few big brands now, a few big restaurants. You go anywhere on Main Street in the US or here in the UK, there's no small businesses anymore. It's all the big corporations. So if there's a supply chain problem, now it disrupts the whole thing. And they're blaming that for inflation, but I think it's been inflation that's caused it. And with that, let's quickly look at where the markets are this morning. It's 10 past 8 a.m. London time. So we've got spot gold at 1827. It's up about $4. High has been 1830, low 1821. Silver is at 2161. It's up. Actually, it's unchanged. The high has been 2170, the low 2151. Just a quick few comments on the technical picture for gold and silver. And I know short term is really difficult. Longer term, of course, with the Bank of England government even admitting that we're going to have hyperinflation almost in food prices. Actually, it's not hyperinflation in food prices. It's very high food prices. Hyperinflation, to be exact, is the collapse of the currency. And I think we might get that because these guys don't really know what inflation is. And they're asleep at the wheel. And it's really scary that these guys are in charge. But yeah, and that's why we need to hold on to our gold and silver. But technically, in the short term, I think what we've seen in silver, especially, if you look at this chart here, is the traditional bear trap. So what that means, the market breaks some key technical levels that have held for a while. And then people expect it to dump. There's been a lot of people talking about silver going to the teens, but then it all of a sudden just reverses and goes back above that support. That's called a bear trap. It also happens on the upside. It's called a bull trap. And I think gold yesterday, it dropped massively in the morning here in London to like 1786. And we closed almost $40 higher. Well, it was about $40 higher and near that high. So I think that was a bear trap as well and a massive reversal. So things are starting to look a little better, I would say, for the precious metals. So I continue now. The stock market, the Dow future is up 97 points, 1/3%. The NASDAQ is up 2/3%. The S&P is up 18 points or 0.5% at 40.28. The FTSE is up 20. Euro Stocks 50 is up 28. To the currencies, yeah, we're seeing the pound rebound despite the cluelessness of the guys in charge of our currency. I think it's a normal correction in the bear market. The pound had been heavily oversold in the last few weeks, and the dollar also had been overbought. So it's continuing to go up here. We're up 0.2% at 124.04. The euro is up 0.3% at 104.72. The dollar is up slightly versus the yen, 129.34. Dollar's down 0.25 versus the Swiss franc at 99.94. And the dollar's down 0.5% at 6.76. Again, the dollar is just the best of a bad bunch of fiat currencies. They're all going to go the way of the dodo bird. They're all going to go towards its intrinsic value of zero, as Voltaire once said. And we continue here to some other fiat currencies. Aussie dollar is up 0.2% at 70.30. The dollar is down 0.2 versus the Canadian dollar at 128.25. And the Kiwi dollar is up 0.5% at 63.40. General commodities, no let up here. So much for those people who say that raising rates is gonna kill demand, it's gonna kill inflation or kill rising prices. It's not, because the inflation has been baked in the cake for many decades, and it's now flowing. The Cantillon effect is making it flow towards commodities, real things, services. Yeah, WTI crude is down slightly, but it's back above 110. It's at 111.65. Brent is unchanged at 112.77. High-grade copper is up 0.2% at 422. And nat gas back above 8 at 811.60. That's US nat gas, of course. And to finish off, let's quickly look at where the 10-year yield is. Well, it's up 5 basis points overnight at 293. So if you enjoyed this video, make sure you hit the like button. Please share it far and wide. Subscribe to the channel if you haven't yet. And you can also follow me on Rumble, Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.